Thank you, sir.
All right. Thank you, everybody, for coming. I'm very excited for this panel today. I am Rajan Annadurai. I run what we call the cyber and intelligence business for North America. And I have an esteemed panel in New York of leaders, of thought leaders in some of our customers and from Mastercard as well. So um, today we're going to be talking a little bit about the evolution of digital banking ecosystem and how we can secure it and protect ourselves from fraudsters and uphold trust with our customers. So, but before we jump into the panel, I am going to have everybody introduce themselves. So, Tim, can we start with you?
Sure. My name's Tim Hong. I'm the Chief Product Officer at Money20. I lead up the global product team, and I'm the GM of our enterprise business called Engine. I've been with the company for over 8.5 years, and really focusing on problems like this, not just for Moneyline, the consumer app, but also our enterprise clients that use our embedded marketplaces to embed personal loans and other financial products into their own experiences. So glad to be here.
Yes, hi, I'm Rajan Annadurai, Chief Technology Officer at Deserve. I run engineering product. At Deserve, we are a credit card platform. As a credit card platform, we have many banks and governments who have a credit card with us. And every credit, just like every other credit card programs are magnets for fraudsters who always want to defraud. So we probably have seen every scenario possible and built systems and protection against.
Actually,
Just hi, everyone. I'm just Therese. Yeah.
Good.
Hi, everyone. That's better. I'm Jess Turner. I lead the global open banking business for Mastercard as well as our API team. I've been at Mastercard for a very long time and have had many roles, and I'm thrilled to be here with two of our esteemed customers. So, all right. So, if we think about everything we do today and everything we do online, right? So, whether it's online banking or it is applying for a loan online or managing our finances online, we're doing it all digitally, right? And obviously, open banking is the cornerstone of all of that. It enables a lot of that to happen. But for these beautiful digital experiences to really to play out, we need to make sure that they're also secure. And everyone's probably heard, or many people have heard of synthetic ID fraud. Everyone's heard of account takeover. So these types of things are very, very common in the ecosystem. And today we're kind of dive into with our panel, how they combat some of these things, right? So I'm going to start off with Rajan, actually. So Rajan, you've obviously been in this space for a long time, and you just said you've seen it all. Can you talk a little bit about what is synthetic ID fraud, and why is it so hard to detect?
Yeah, perfectly. So, synthetic ID, a definition of synthetic ID, the way we see it is if a customer knowingly enters false information or information which is not theirs, it's synthetic ID. And in the credit card space, 99% it's false social security number. They either make up a social security number or it's somebody else's social security number. Now, I'll give you a few scenarios or one common scenario which we see, and that will give you context on why it's difficult to detect. Let's say Joe the fraudster, who doesn't have a great credit history, doesn't have what he'll do is will either make up a social security number, and then he will wait for a while to build a credit history so that he can defraud banks. And the way he does it is it's pretty easy. You can actually go to marketplaces where you can add yourself as an authorized user for somebody who has good credit history. So Joe the fraudster, for $200 or $500, could go and say, you know what, piggyback on somebody who has good credit history, and then that person's credit bureau, like this bank is continuously reporting to bureau, and now Joe the fraudster has a record which has continuously payments being made, and then he'll go to a starter card, wait for 6 months, 8 months, build up more, and then apply for a credit card with a high revolving line and immediately bust down. And this is something he'll do it like probably 100 of things in parallel. So these guys do it in a pretty economical way. I mean, they have a bunch of these things going. So unless and until you understand these things and establish systems in place and trying to identify, you will get exploited. So that's one of the big things in our synthetic ID.
And how do you think that, obviously we've got a lot of breaches data, right? And it's all out there. Have you seen, like, over the past, say, 5 years, that breach data has led to even more of these sorts of frauds happening?
Yes, I think there are a number of ways. Many times they make up social security numbers which are not even in existence, or it could be social security numbers of children or young adults who never have a bureau established, or even deceased person, or sometimes it will be somebody who never ever pays attention to their what's there in their credit report. So you would not even know that somebody else has taken over your SSN and started doing it.
Correct.
So it's pretty common.
Awesome. Well, thank you for that. Jess, as more people open accounts and manage their finances online, how can we secure the digital ecosystem and help combat this problem that Rajan was talking about? So there's a few things we can do. I will say I'm going to go check my credit report after listening to that. Everyone else here should. The reality is, because of the way the world is transformed, it's important that we do multiple checks in the digital environment to make sure we know you are who you say you are before we're allowing any type of service for you. So there's a really huge focus, not only for Mastercard, but really in the digital industry, on starting with kind of a digital identification, digital identification of, are you who you say you are? And it doesn't need to be for a credit card or a bank account. It can be for opening anything. But are you who you say you are? Yes or no? We have a digital ID product that does that. And then for me personally, I work in open banking, so I'm going to make a small plug. Then we can use open banking data with consumer consent. And again, this is what's important. It's about consumer consent to then check and say, hey, you know you are who you say you are. You want to link to this account. Is it actually your account? The answer is yes, we let you. And then there's multiple other things we can do. And there's a lot of other products within there that aren't just about identity. They're about fraud. We can do device detection. We have a set of them ourselves, and there's many in the industry. But the point of the whole thing is, how do you let the consumer and the end user start their journey, be as safe and secure all the way through, without fraud, without compromising their ID, but with little to no friction. That is really where the magic happens. It's awesome. Just to follow up, can you talk a little bit about how we brought our assets together in terms of open banking and our identity assets? Sure. So we had an acquisition called Akata. Open banking has an acquisition called Finicity. We've brought those to Mastercard level standards of maturity as Mastercard products. What we did is we took both products, are you who you say you are, and do you have an account, and do you have money in the account? And we've combined it into a single API, so that not only is the consumer friction gone, but for the developer and our customers to implement it, it's streamlined and easy to use. And we have some people using it.
Absolutely. So this is open banking is really, really important for us. And let me back up and give you a little bit more context. As a credit card platform, usually credit underwriting is based on bureau data. And we always tell customers to augment bureau data with cash flow information, because a lot of young audience do not have established credit. And cash flow is a lot more real-time and accurate on how the financial health of a person is. So we have cash flow open banking as part of your onboarding journey. And what we found is, if somebody connects their bank account who has at least 6 months tenure in your bank account and at least 10 to 15 transactions a month, the fraud vector significantly decreases. So we have many signals, but open banking is a very strong signal which helps us establish identity a lot more stronger. And that's something which we do along with the new API, where it's within the same open banking API, we get a fraud score, we kind of establish identity, we do everything in the same step instead of adding more friction to the user. And then you added a little bit of social security verification check, which will help you on synthetic ID. Then you will be a lot more confident that you will be able to, issue a line even 100% with a full instant issuance.
Awesome. Thank you. Thanks, Rajan. So both of you brought up very good points, and I'm going to ask Tim to elaborate on that. So for fintechs and FIs, obviously the consumer experience is it's very critical. and it could be a deal breaker if we don't get that right? So, but how do you balance the need for security along with providing the most seamless experience for a consumer?
Yeah, but we have a lot of experience here. Over 10 million customers. Onboarding is a hallmark for fintech, and how do you create access, empowerment without making folks go to a branch? As an example, I think one thing that's important about what's kind of being said here is that there's this notion that we're not done at the account opening. You're really following the user the whole time, and once you get past this notion that you have 100% trust just on account opening, once you start to realize that you're actually actively monitoring and looking to build a sense of trust over time, over the entire user journey, it actually lets you do a few things that can move where you do these kind of points of friction. Friction is actually not all bad. Like obviously, friction is how you stop certain fraudsters and step up. Authentication, for instance, is obviously one way that, let's say, certain markers are hit. You might ask for a selfie and a document scan, like a driver's license, as an example, right? But that might just only be for account opening, and you're still monitoring that account. Maybe you're unlocking additional capabilities over time. Being able to, let's say, on one of our bank accounts, being able to do a larger transaction might go through more friction, a bit more high touch. So you're constantly scoring these behaviors to try to figure out when to entertain, when to add in friction, and where you can actually push off that friction for later.
That's awesome. I'm glad you said that, because opening an account is obviously a very important first step. But then that continuous monitoring is what helps us against things like account takeover. Can you talk a little bit about account takeover? What specific signals are you looking for throughout the life cycle of that tenure with the customer?
Yeah. So I mean, number one is you just can't trust passwords anymore. Let's just not. We've oftentimes joked about just not having passwords ever again, because with the breaches and reuse of passwords, like a username, a password, an email, and password is pretty much kind of
all out there.
Yeah, you really can't trust it at any level. And so you're doing a lot of pattern matching with device ID and fingerprinting. You're obviously using multi-factor. Obviously, there's exploits even around SMS. So you have to really make a decision around, do I send MFA via SMS, or am I willing to get them to use Google Authenticator, which for a lot of folks is going to be very tough. So, you're doing those kind of things. And then, of course, even after login, you're looking at behavior, unusual behavior, unusual transfers, unusual purchases, all those kind of pattern of history that might indicate fraudulent activity.
Awesome. Thanks, Timmy. So now I'm going to ask a question to Jess, one that is very close to my heart: financial inclusion, right? So we've talked about open banking. We've talked about how we're doing everything digitally. We've talked about all of the fraud and some of the really sophisticated fraud. Why is all of this really important for financial inclusion? So financial inclusion is at the core of everything we do. And I believe, you talked about it a little bit before, there's traditional credit bureaus in the US, but not everything is accounted for that. And sometimes it doesn't paint a full picture of how someone's behaving. What happens is, when you have open banking and you have trust, meaning people who maybe aren't as comfortable in the banking environment, people who haven't really created a lot of credit yet, they have to trust that when they allow you to see their data, because it's consented, you're going to do it in a way that's transparent, clean, clear, and useful focus. And they have to trust that you're going to make sure you protect their identity and monitor and take care of fraud. It has to all be packaged together, because it is about trust. Once you do that, you can enable a consumer and a small business to give access to their data to a lender of any type, really, that they so choose, as long as they're following the same principles we're talking about here around quality of data, use of data, protection of the data. and really get loans they may not not have access to. And that allows them to establish credit. It allows them, if they have some credit, to get better credit. And it allows them also to know in the digital economy and the digital environment that it's okay to trust the right players as long as they're doing things in a way that makes sense and they're working with the right players. And Mastercard's brand is about trust. We believe that. That's why we sit between it. That's why we work with our customers to take feedback on things we can do and do things in a different way. Because our customers, the consumers trust our customers is the truth, because we sit behind you. And I think we're just getting started with open banking. I really do. I think we have a lot more to come. We're excited for it. And, I think we start with banking and you go beyond that. But if people own their data, if we have responsible parties that can help clean and use that data to provide access to things, that's how you get real inclusion. That's what it's about. Awesome. Thanks, Jess. Rajan, kind of the same question to you. How important is that philosophy for you? How do you think about thin file customers? That may be great customers, but how do you think about them?
No, absolutely. Add to what Jess said. For us, thin file customers, and especially in this economy, there's a lot more people who stay with debit and they're not till they try to get into credit much later in their life. So it's a very important demographic. It's a cash-rich demographics. We want to actually service them, get them included, and try to do that. For that, open banking is a great tool for us to do cash flow analysis. And if you really think about it, there was a time before pretty much anything you do, of course, you do it for mortgages too. You need to take the last 6 statements from your bank, take a PDF, fax it to your bank and try to establish it. So open banking, the way we think about it from a customer point of view, it's no different than what we all did like 10, 15 years before when you had to establish credit. Also showed you your bank statements, or you went to a bank teller who looked at your bank statements. So all you're doing it in a much more effective way digitally by doing open banking.
Awesome. Thanks, Rajan. So my last question, and I'm going to ask all of the panelists, from your own business perspective and from a fraud perspective, what are some of the challenges that they see coming down the road? What should other fintechs be thinking about as they start their journeys as well? So first to you, Tim.
Sure. Fraudsters are always innovating, and they're innovating as much as we are, in fact, maybe even more sometimes. It's kind of like that saying, you have to outrun the bears, you have to outrun the slowest person, the slowest other person. So obviously we're constantly innovating on it. Data is everything for us. We have to be very responsive. We don't view fraud as a static solution. It's a practice within the company that is bringing together data scientists, product managers, UI, UX, like all throughout the value chain. And so, for us, it's about creating a capability to respond extremely quickly. Certainly, if you look at how quickly fraud rings can attack certain vectors, then really try to be all faster than the next guy, but also faster than the fraudsters themselves. So, I think that's where we focus, because there's always something new. We were just talking about Gen AI and some of the challenges there, which I think are still, frankly, even still emerging. So being on top of all of those things, absolutely okay.
Sandra?
Yeah, I concur with Tim, and that's pretty much overall fraud is something which it's a culture and everything you bake into your development practices. So, and being able to be nimble, which basically means organizationally, if you think about us, we have engineering and product. The fraud desk is not something which is such a big separate organization. The person who said Rajan Annadurai is amazing, and he pretty much works with us so that when you try to see a pattern and have to do a solution, we will look at all tools from an engineering and product specifically. Okay, you might not even thought, when you put all these people together, you might think of, okay, there is a device ID which I can collaborate along with this, or these models can be enhanced to do this. So being nimble and not having organization silos such a way that you can't just hang in different expertise together, it's really important for you to continuously progress and be ahead of the curve.
That's a really important point. I see that in many companies, like their cyber team, the fraud team, and they're all different organizations, but kind of bringing that together. And Jess, you were talking about this before, like consortiums. even just doing that within an organization can be very effective. So just what are the challenges that other fintechs should be aware of and from a solve perspective as well? Yeah, I mean, I would echo what both of you have said. And I wouldn't just say fintechs, it's everybody. Everybody needs to be really aware of what's happening in the cloud space. And with generative AI comes a host of problems. And, we're in a race to figure out how we can use it for good, right? Has the power for good versus no. But I do think being ahead of the curve, really understanding what's happening, leveraging new tools and trends and mapping are critical. And I think the amount of data sources that are cleaned, categorized, and useful in a way that can connect is a power that you can get. You can get from different entities. You can get them from Mastercard. And I can tell you just from working with our customers, we take feedback. We take feedback on, hey, this is what we're seeing. What do you see? And on that's how you win together. But it's not one product or one trend or one data service. It's a mix of many. And I think the opportunity to beat fraud will only keep growing. There's two ways to think about that. Anybody that's in fraud knows this, right? You can never become comfortable in your job or be complacent because the minute you think that you got something else has come away. So, all right. So I think that this was a great panel, great discussion. Thank you for sharing your thoughts with us today. And thank you for being here with us.
Thank you.
Thank you, everyone.
Thanks everyone for watching.